This is Business Edge on News Central. I'm Tolulokwe Adileru Balogun. We start with the headlines at this time. Kenya and Uganda are staring at a new round of trade disputes after Nairobi reintroduced a tax on eggs from Uganda. Kampala says the Kenyan government is now taxing its eggs at a rate of 72 shillings per tray, bringing back a levy the neighbors suspended last December following bilateral talks. Ugandan traders have protested the move, saying it does not augur well for trade between the two countries. The new trade row comes at a time when the two countries are yet to resolve a long-standing dispute on milk after Kenya barred the neighboring country's dairy products in 2019. Now, according to President Hakainde Hichilema, Zambia's official creditors will meet for the first time on June 16th to discuss restructuring the debts of what became Africa's first pandemic-era sovereign default in 2020. The long-delayed meeting comes at a crucial time for the nation, which needs to receive financing assurances from its bilateral creditors in order to unlock a $1.4 billion bailout package from the International Monetary Fund. External public liabilities grew to $17.3 billion by the end of 2021, with about one-third of the total owed to Chinese lenders. Zambia reached a staff-level deal with the IMF in early December. Since then, progress has stalled under the Group of 20's so-called Common Framework for Debt Treatments. The Nigerian Communications Commission, NCC, is set to introduce a licensing framework for the establishment of mobile virtual network operators in the country. It is believed that this will lead to the massive penetration of broadband services to the unserved and underserved areas of the country. The Commission has also started talks with a European firm that is offering grants and loans to support broadband infrastructure deployment as part of digital economic development in the country. And staying in West Africa, by the end of 2021, the Bank of Ghana had secured monetary compensation and refunds totaling around 7.9 million Ghana cedis for complainants. Ghana's regulated financial institutions paid complainants whose complaints were lodged, investigated, and found justifiable based on the bank's market conduct rules for its regulated entities. A breakdown of the total amounts, which was captured in the annual report on complaints management function released by the Financial Stability Department of the bank, showed that £20,000, around $250,000, and over 5.7 million Ghana cedis were paid. And staying in Ghana, the implementation of trade facilitation measures under the African Continental Free Trade Area Agreement, as well as reductions in intra-AFTA tariffs and non-tariff barriers in goods and services, could boost Ghana's real economy by 5.7% relative to baseline. By the year 2035, about 4%, representing two-thirds of the country's AFTA income boost, will come from trade facilitation measures, while reductions in non-tariff barriers will account for 1.7%, with reduction of tariffs accounting for only 0.2% increase. About 0.2 million people will be lifted out of extreme poverty, and 1.8 million are expected to move from moderate poverty, with gains in poverty reduction attributed to faster growth in the wages of unskilled workers over that of skilled workers, coupled with the rapid increase in wages for women more than men. And again, as I said, this is Business Edge kicking off on Monday, an extended version of the show now going to 1 hour. And when we come back, we'll get into our first conversation of the day, which is looking at Nigeria's Q1 2022 investment report. Only 4 states in Africa's largest economy attracted FDI in the early quarter of this year. And of course, Lekan Obanjo is standing by later on the show to give you international business news. And we'll be checking in with the crypto scene in the course of today's show. Welcome again. Now, according to the National Bureau of Statistics, Nigerian capital importation Q1 2022 report, the total value of capital imported into the country in the first quarter of the year stood at $1.6 billion from $2.2 billion in the previous quarter, and this showed a decrease of 28.09%. 32 states in Nigeria did not attract any foreign investments in the first quarter of the year. A report shows that only Lagos, Oyo, Katsina, Anambra states, and the Federal Capital Territory attracted investment during the period. When compared to the corresponding quarter of 2021, capital importation decreased by 17.46% from $1.9 billion. The largest amount of capital importation by type was received through portfolio investment, which accounted for 60.87%, around $957.58 million. This was followed by other investments with 29.98%, while foreign direct investment accounted for 9.85% of total capital imported in Q1 of 2022. By destination of investments, Lagos State remained the top destination in Q1, with $1.1 billion accounting for 71.16% of total capital investment into Nigeria. This was followed by investment into Abuja, that is the FCT, valued at $446.8 million. Anambra, Oyo, and Katsina states followed each. What's happening to Nigeria's other states, and could there be a change by the end of the year? Let's get into today's conversation once again on Business Edge. Joining me today, I have Gospel Obele, who happens to be the chief economist for Streetnomics. All right, Gospel, welcome to the show. Thank you so much for joining me.
Thank you for having me as well, Tolu.
So we've seen this report, which really doesn't paint a really nice picture. There are 36 states plus the Federal Capital Territory in Nigeria, but what we have is a report giving us 4 states only plus the FCT bringing in some money. But before we get into that, we saw a decline. It was 2.2 billion around this same time last year. It's 1.6 this year. And last year, you would have expected this to sort of be reversed. We're coming out of COVID-19 restrictions and lockdowns. You'd expected a little bit less and then a gradual increase into this year, but that's not the case. So what do you think is responsible for this decline in what would have been the expectation?
Yeah, thank you so much. Great speaking with you again. So as discussed several times in our meetings, when it comes to foreign direct investments or any form of commitment, investment commitment in an economy, what investors look at are the most subtle but most critical factors that actually drive growth. So the recovery and the growth that Nigeria/Nigerians have been, in quote, celebrating has been numbers growth, all right? Not really a growth or an improvement in the enablers or in the drivers. When you talk about enablers and drivers, you're talking about the infrastructure, you're talking about the human capital, you're talking about education, you're talking about all of the fabrics, that it helps to kickstart productivity at a level that you are sure of returns, especially sustainable returns when you think of investment. So yes, the economy may have been recovering in numbers, but in actual sense of drivers has been worsening. And unfortunately, these are the major indicators or the key things that investors look at, even Nigerians in diaspora as well. These are the major things that they look at to commit some form of investment, into the economy. Now, we've seen all of these narratives worsen, right, within Q3 2021 and to the current day, all right, and that's also because we've seen how the economy has been managed. We've seen the outcome of poorly managed economy. We've also seen the vulnerability exposed, as a result of the Russian-Ukraine crisis, plus the fact that it's a pre-election year. And many of these narratives are not, in view of any critical reforms. So I'm not surprised that we are seeing these conversations going to also to state that even the so-called wins we have, all right, there are high level inequality to those wins. Lagos State only has about 71% of the portfolio of, capital engagement in Nigeria at the moment. If you want to flip it on the other side of things also, foreign portfolio investment also holds the most critical chunk. That's to tell you that there's some form of inequality spread in how investment in Nigeria is perceived, in how investment in Nigeria is undertaken and all that. So fundamentally, it's not really an engaging outcome when you think of the results on the landslide, even if you add or you factor in context the so-called states that have benefited or the so-called FDI that has benefited in the context. Yeah.
So let's talk about that uneven or unequal spread, because in all honesty, are we actually expecting all 36 states plus the FCT to get some level of investment? Is that really the expectation? And if it isn't the expectation, then should we really be concerned if we're not seeing that. So what would you be expecting? 18 states, half of Nigeria, to get some form of investments coming in. 20 states. What would that breakdown look like? Because I don't think it's really realistic for us to believe that every single state in Nigeria will have some kind of investment coming in to a certain level. Definitely not to the level that Lagos also has.
So, I mean, to be honest with you, Tolu, that's also to state that the Nigerian economy is really failed on many grounds. Forget how, promising or how people want to paint the context. It's failed on many grounds. The key grounds where you drive the engines for growth and human productivity or systems productivity are failed on many fronts as well. All right, many states are not commercially viable to start with. You need to have achieved a level of commercial viability, some level of positioning and show some level of prospects before you can even begin to talk about domestic. Before you can begin to talk about investment, even at a domestic level. So we've seen that a lot of states are not commercially viable to start with. And even the states that seem as though they are commercially viable, like the Lagos state and Abuja and all the likes, they are commercially viable by sense of positioning, not really by sense of critical, system-wide, developmental concerns. Yes, in Lagos, we've seen some infrastructure and all that, but it's taken us ages to get here to start with. Do not forget also, Lagos has always been the capital city, even pre-independence. All right, Abuja is the administrative capital. So you expect that by default, some certain advantages will accrue to those states. Now, those advantages accrue to those states by the positioning, not necessarily by the widespread engagement, although Lagos State has been moving a bit forward in that front. But in terms of deep dive structural engagement, we haven't seen any state. So just to let you know that, first of all, I don't expect all states to have the same spread. But then again, I'm also speaking to the fact that even the so-called states that have the edge, all right, they are, not really structurally enabled to take advantage of that. What we've seen is just a positional advantage, which the other states do not have. If Katsina were to be in the Lagos State's position, it will attract way more than Lagos.
Yeah.
If Rivers State or if Kebbi State were in a Lagos in quote position, it will attract more than Lagos. So it's not really a function of if it's Lagos or Kebbi or Zamfara. It's a function of technically we are not systematically productive as a nation.
So there are those who believe that investors should be able to look beyond the challenges that Nigeria has had and look to the potential of the largest economy on the continent. And we see what investors are currently looking for right now with record high inflation in the US and the UK. There's some form of predictability and sustainability that investors are looking for and somewhere safe in a way that will give them the returns they're looking at. Do you think Nigeria's potential is enough for investors to overlook the challenges that the country has had for a number of years? And is perception even helping us? Because there's investor confidence, but a lot of that comes about by an issue of perception, how the country is also perceived.
So to be honest, potential has a lifespan. If an individual has the potential to become something, after a while, when you don't become that thing, or when you don't begin to show prospects that you can become that thing, then people will start losing faith in your potential. Potential only brings about hope, and that's the card or the strategy the Nigerian narrative has played over time. But with the worsening state of things, the lack of public leadership, the lack of some form of citizen agenda setting, citizens who are not even technically sound to know what to expect or hold the government available and all of those contexts. All right, the potential you begin to see a loss of confidence in that potential to start with. Then secondly, no matter how you read the potential conversation in the place of perception, even perception also has a lifespan, because at some point, perception would need to begin to meet a reality, for the hard decisions to be made. All right, so the conversation around investments are hard decisions. Before I can commit a part of myself, my investment, my time, and everything I've worked hard and labored for to you or anything else or any platform, it has to be worth it, in terms of returns or in terms of value for that investment exchange. So when that potential or perception does not seem as though in any time soon it's going to be worth it, then you begin to hear the conversation of lack of investors' confidence, loss of investors' confidence and all those directives. So I think we need to move quickly from potential to, active maximization of that potential. And we don't necessarily have to have gotten to the promised land, but we need to show prospects that we are going to the promised land. until these fundamentals begin to happen, all right, we may not begin to see number one, a critical shift in the spread of foreign portfolio investment, foreign direct investment, other investment. Number one. Number two, we may not begin to see a critical shift in the spread of states that are benefiting, or even institutions. No Nigerian. How will I put it now? How I could count how many so-called first-tier Nigerian banks were really involved or benefited from the portfolio of investments and all that happened, in the last quarter. I could count how many. That's to tell you that it's not just a government conversation. It's not just a state leadership conversation. It's an institutional failure to a large extent that cuts across both private and public institutions. So until we begin to show prospects of going to the promised land, we cannot attract any investment.
All right, Gospel, we'll take a break here. Potential has a lifespan. Well, in that terms of the potential, 4 Nigerian states did bring in some money from outside in the first quarter of this year. We'll get into the details surrounding that and why inflows into Nigeria have been decreasing for the past few years. You're watching Business Edge.